In this video, I'm going to share with you a little of my thoughts about what happens when you are providing liquidity to Bitcoin and then the market turns red. It bleeds out, price goes down. Maybe some of you are panicking or did panic, but let me tell you one thing. If you're not bullish about Bitcoin, you shouldn't be bullish about anything in crypto because Bitcoin runs the show. If it goes down, everything goes down. If it goes up, everything follows along. So looking at this chart here on CoinMarketCap, you can see for the past 7 days, everything is red, right? The price dropped down to $50,000 per Bitcoin. To me, that's a sale right there. But don't look at the tree, look at the forest. So let's zoom out and look at the forest. Let's see here what the 1 month chart looks like. And this is looking a lot better, right? So let's go 1 year now. And look at this beauty. Even accounting the recent dip, look at this beauty. What other asset on earth and even out of crypto has managed to over 2x in value in the span of 1 year? I don't get why people get so troubled. I mean, I do, because probably a lot of the players in the crypto space are over leveraged and they're getting wiped out when Bitcoin goes down. And that's also one of the things you have to account. Don't over leverage yourself, even with Bitcoin, because there are some manipulators on the market and they will take your money if you are over leveraged. Okay, so that's part of the risk of playing with leveraged, obviously. But now let me share with you some of the things that I personally do when it comes to providing liquidity to Bitcoin. And if you never thought about it, I already did a video covering the best Bitcoin liquidity pools for beginners, which will be linked down below. But basically, these are the pools where you see Bitcoin paired with a stable coin. So let's go on and see for the past week, the chart for the past week. It went from 66,000 to $50,000 worth of Bitcoin. And what you can do is that you can set up ranges. I explained to you how it works better in the video that I just mentioned, but let's go here and speculate a little bit on possible strategies, right? So what's happening here, let's assume that I had a setup range around $60,000 and it goes on the upper end to 65,000 and on the lower end to $55,000 worth of Bitcoin. So even on the way down, I'm generating fees whenever other people trade the currency. And even if it goes lower than that, and now I'm out of range, not generating fees, I don't mind to hold because one, it's Bitcoin, or even if I want to sell, what happened here was that all of my position has been turned into Bitcoin, 100% worth of Bitcoin. So if you want to go and opt out of your position, sell it, you are now holding 100% of your value in Bitcoin. And effectively, if you're considering a pool of a Bitcoin paired with a stable currency, that means that you dollar cost averaged your way down to the pool. So now you're holding more Bitcoin than you started holding at the beginning, and you just have to do one thing: wait for the price to go up. And that's why I started the video saying, if you're not bullish about Bitcoin, you probably shouldn't be bullish about anything in crypto, because Bitcoin runs the show and it will bounce back. There's a reason why governments are accepting Bitcoin as a strategic reserve. There's a reason why companies are investing into Bitcoin. The whole financial landscape of the world has been changing, and it will keep on changing through the future as mass adoption comes near. I don't know how long it will take, but again, if we go all the way out and zoom out, look at this chart. I mean, sometimes there's dips, of course, but it has always bounced back, and that's due to adoption. And the market cap of Bitcoin right now, it's over $1 trillion. There's not many assets on earth who can stay above this specific market cap. So the way I see it, even if we're dipping, even if the market is not looking all that good, it's an opportunity to get more Bitcoin. If you have been providing liquidity on the top here, holding is one option, because like I said, the price will bounce back up, and once it does, you'll be back on track with it and you'll start generating fees just like that. Or you could potentially dollar cost average. So instead of just jumping into one position with 100% of your assets that you are willing to invest, you can split them into smaller amounts and you can invest daily or weekly. It depends on your strategy, how much you are willing to invest also. And when you do that, you can dollar cost average. So let's go here on the 7-day chart again. So if the price remains the same, you are on range. Your dollar cost average means that you will add to your position. You will deposit more into your current position. Or if the price drops, you will leave that position open and just start a new one adjacent to the bottom. And you can repeat this over and over. So when the market bounces back, you have all those positions set in place waiting to generate fees. If not, like I said before, you can buy the dip effectively, and the way you do it is just by opting out of your position, because now you're holding 100% of your initial investment worth of Bitcoin plus the fees that you have generated in the meanwhile while other people traded. If you do some other different strategies, let me know in the comments all about it. I would love to hear what you're doing with this recent dip in the market. So guys, if you enjoyed this type of content, don't forget to like and subscribe. I'm going to wrap this one up. Thank you so much for watching. Take care, you know how crazy crypto can get, and in these market conditions, a lot of wild things will happen, and I'll see you on the next one.